2003. Welcome to Conversations, the official MTA podcast. My name is Alex Piroglu, and today I'm joined by Colin McClean. Colin is the founder and managing director at SVM Asset Management Limited, and he will be presenting today at the UK chapter Market Technicians Association monthly meeting. Colin is an independent Edinburgh-based fund management group he founded in 1990. SVM specializes in UK, European and global equities. Colin is a fellow of CFA UK, a past chairman and former board member. He's also a regular member of CFA Institute and is a member of its board of governors. He's also a regular contributor to financial publications and a guest on Bloomberg TV, radio, CNBC, BBC TV and various other radios. Frequent conference speaker on investment hedge fund and behavioral finance. Colin's recent conference presentations and many articles have focused on new developments in behavioral finance and the implications for management of investment teams, the interpretation of information and correcting biases in portfolio management. The topic of today's presentation will be technical analysis and behavioral finance. Both the presentation and the presentation and the interview itself have been videoed and will be available to watch on the MTA website, along with the archives of all the UK chapter monthly meetings and technical presentations there. Without further delay, let's talk to Colin.
Right,
thank you very much for agreeing to present at the UK chapter. Let's begin to get to know you a bit. Could you please give us some information about your personal educational background before you got involved with technical analysis?
I started work as a fund manager, having qualified as an actuary. So I started working in insurance and developed as a fund manager before setting up my own business. Before that, I'd worked for John Templeton and run their European business. So I'd got quite a broad experience, mainly in equity management. And in the second half, I would say, of that career, I've taken on more technical analysis as a factor in what I do.
Which leads me to my next question. How did you get first involved with technical analysis? What was it that made you start using it more elaborately?
Well, I think I realised that the markets weren't as efficient as they were meant to be, and the concept of the efficient market hypothesis certainly had some weaknesses, and as an active manager I was trying to spot those, and some of those did seem to come into patterns. So despite the concept perhaps that everything's already captured in prices and you should focus fundamentally, I realised that didn't describe all of market behaviour, and I think my interest in technical analysis along with fundamental has also come with my interest in behavioural finance as well. So I've realised they're all important parts of running money.
Understand. So could you please, in that case, describe us in your day-to-day responsibilities and the most challenging aspect of your work?
I'm the head of the firm, but we have a number of investment professionals running individual funds. They have quite a lot of discretion individually. They've earned that through good performance records. So I run some conventional long-only money, and I run our long-short fund, which is a pan-European equity money. So that tends to have more of my decisions each day, more trading in that.
I understand. And previously you mentioned that you managed to combine fundamentals, technicals, and behavioral finance. How do you manage to juggle all three principles?
I think I'm looking more to the technical factors as helping perhaps confirm momentum or confirm a trend. So I'm probably much more interested in sticking to trends and looking for those turning points. But given that I also short within the hedge fund, I think we're sometimes looking for things that break down for big changes in trend there as well. So technical analysis is a timing factor, and it helps perhaps with confidence and changes of trends. But we base our decisions on fundamental analysis initially, so I think there's research as a starting point, and then we try to look at if we can time or whether there's some support for what we're doing.
I understand. If you could please talk about your favorite tools and techniques, which would these be? What would you specialize in as far as technical analysis is concerned?
I think sometimes the very big breaks and trends have been indicated clearly when moving averages change or when we get crossing over of short and long-term moving averages. So that, plus perhaps timing with relative strength, certainly for putting on short positions, I do pay attention to whether stocks are oversold already or whether we can get a better timing for them. So I would say we use some fairly common and simple ratios, but really just to point to either whether we can time something better or whether a trend is ending. And sometimes that can persist for quite a period of time. So some of the very big breaks, say we're seeing in emerging markets now, I think can be a medium-term pattern. It doesn't need to be a short-term trading.
So by and large, if I understand this correctly, you would probably characterize yourself or pigeonhole yourself on the momentum or trend following kind. Is that correct?
I think much more so, yes, I would say so.
How would you approach, for example, looking at the chart? If you ask you, for example, to say at the S&P 500, what would be the methodology behind analyzing a particular market chart, whether it's an equity or an equity index?
I think in terms of what history points to when markets make new highs, as we had earlier on in the year in the Dow, I think that gives a certain degree of confidence to stick with a medium or longer term trend. So I think the important thing in current markets, and has been for the last year or two, is recognising that with some of the most successful investments, they are the most volatile, and to stick with them through the year is often, despite being a bit painful, the important thing to do. So I think we have enough information to point to still being in an uptrend there, and I worry less about some of the short-term information that's going on, some of the short-term setbacks.
I understand. And if you were to, for example, pick up the phone and give some advice to 25-year-old Colin trying to enter the industry, what would you advise him?
I think it's important to keep learning all the time. I think you take in a lot more when you are younger, so I think in your 20s particularly, and even in 30s, I think is a very key time to form your own ideas, and I think listening to other traders. I think people should avidly, buy the books for traders, and in terms of looking at what some of the most successful ones do. Try and understand their own psychology as well, and try and get a good understanding of where their own comfort zone and where their own skills are. So I think it's a good time for learning, and people should carry that right on past there.
And now that you mentioned about books and learning, if you had to recommend 3 books, authors, which would these be?
I'm quite an avid reader of books, and I do think that some of the ones in behavioural finance are helpful too. Things like Thinking Fast and Slow by Daniel Kahneman, which was out last year. But also I think these books, like say Jack Swigger's one on the new market wizards, even some of the ones that have been out a number of years, I think point to some very good traders, some very good truths there. So I like those sort of books, and probably pay as much attention to those and learn a lot from those, I would say, as the purely technical books.
Okay. And regarding today's presentation, for those that will be watching just the interview and will not be attending the presentation, would it be possible to give us a bit of a synopsis or of what would you be presenting? What are the main points that you would be trying to give across to the people here?
I think for those who are trading in the market, understanding how the buy side and sell side behave, so understanding some of the patterns there, even how companies behave. So I think understanding some of those patterns in the market, some of the failures of analysis, some of the psychology that underlies analysts is important. I think one of the conclusions in behavioural finance that's helpful for fundamental buy side, longer term investors as well as traders, is keeping some record or journal. Not so much just to document your trades, but to try to document the thinking behind that and the moods and context behind it, because I think we find it very difficult to go back with perfect hindsight and not to excuse what we've done. So I think to learn ourselves, I think documenting the context in which we make decisions and do trading can be quite a key tool to get better and to eliminate some of the bad stuff.
I understand. Okay, so how does Colin relax outside of market hours? What do you usually do to enjoy? Do you have any hobbies?
I don't tend to take my work home too much. So cycling, hill walking, gardening, those sort of things. I like. I don't have the patience or temperament or ability for golf or things like that. So it tends to like things that are a little bit more active. Thanks.
Okay. Well, Colin, thank you very much for the opportunity of this brief interview. My name is Alex Spiroglou for the MTA Conversations podcast. Thank you all very much for joining in.